You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again. It is Thursday. It is time for episode 2 of your bi-weekly options extravaganza known around the globe as the Option Block. My name is Mark Longo from theoptioninsider.com, as well as, of course, from the ever-scintillating network upon which so many of you are binging and mainlining these days. Just like options volume, our bandwidth bills continue to soar. You folks like what you hear. Keep rating and reviewing. Hey, you can keep driving up my bills. So even if you don't like it, keep rating and reviewing. Keep driving up our bandwidth bills. You win either way. And then, of course, if you want to go above and beyond, you want to join us for exclusive content. We had a great pro Q&A earlier this week with vol researcher and novelist extraordinaire, Mr. Ash Vyas. That was a fun one. Of course, we have Options Oddities every Friday. So you get double exclusive programs every week, as well as, of course, access to any show you want on the network throughout the week live. And, of course, the giveaways, the sweet, sweet Trading Crate giveaways. More of those coming up as we speak. So a lot of cool stuff, you know, to go to get access to all those goodies. TheOptionsInsider.com/pro for you cool kids on the old OB/secret club. Let's see who's joining us in the old secret club today. First, let us go out to a quiet, a sleepy, a tranquil hamlet known as St. Charles. We missed him on Monday. We're glad to say he's back again on Thursday. He is the uncleest of Mikes. I defy you to find an uncler Mike than him. Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir. We missed you on Monday.
Always great to be here. Always happy to be back on the old OB, ready to block some options.
All right, let's do it. You know, it fits for you. You spent your early days, your early career blocking things. So it makes sense. It works for you, sir. It works for you on multiple levels. And then we go out to the land of dark and stormy shores, known as Maine, where we have a guy who spends his days just blocking happiness, blocking love, blocking light from your lives. He is the Rock Lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. How go things on the dark and stormy shores, sir?
All light must be blocked. That's all I'm going to say.
You are the Dark Lord of the Sith of the show, sir.
Yes, it is. Actually, it is what I would call a saucy wind here in Maine. It's like 70 and breezy. It's quite nice.
Saucy.
I actually have a sweater on in my office, although I do have the door open, the screen door open. But yes, it's quite a. It is a day of. I think the market has a little bit of the Jekyll and Hyde going, but I'm sure we'll be able to discuss that as we move forward.
My mind races with all sorts of images of a saucy a saucy Andrew Giovinazzi sweater day in Maine. It conjures up all sorts of interesting images. Let's just keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. And man, not much really happened since our last show, so I guess we can kind of just cut the show off here. Nothing really to watch in the markets, except for maybe the biggest sell-off since about 2020 in a single day out there, and a whole bunch of whipsawing, as the Rock Lobster calls it, a little bit of the old Jekyll and Hyde. We got that going on yet again today, listeners. When we were coming into the show earlier today, it seemed like everything was firmly in the red. S&P was selling off. Everything was selling off pretty hard. S&P was threatening to break through that 3,900 level. Got to about 3,903, and ever since we got there, we have been on rally ho mode, rallying about 30-odd handles. So S&P is threatening to tick, not quite there yet, still off about 0.2%. The Dow is to the green now, up about 0.2%. NASDAQ off a little more than 0.4% out there. So another one of these days where if you don't like what's happening in the markets, listeners, just wait 5 minutes. That means our vol friends are having a confusing day as well. They were up more, obviously, earlier in the session. Now they're up a wee bit. VIX up about 2.8 points from our last show, 2630 when we kicked off the show. So a fair bit of juice squeezing itself back in. Maybe not the VIX explosion you may have been hoping for this week, given what we saw out there, but we'll get to all that. VVIX 92 up about 6 points from where it was this time last week. So threatening once again to get into that triple digits range. Let's just see over the last week, how high did we get in VVIX? We got up to almost a 97, 96, 98. And so not quite triple digits, listeners. We're pretty darn close. The same deal for VIX itself. The highest we got out there today looks like about a 26, almost 26 and 3/4 out there. VXX, this weird broken Franken product, 19 and a quarter, up 1 and a quarter, because why not? Then UVXY, 1040 when we kicked off the show. That's up a little over a point, about 1.15 points from where it was this time on Monday. SBUX, our inverse friend, obviously not liking things today. It's at about a 12 when we kicked off the show. Puts it down about 1 and a quarter points. UVIX 1060 up about 1.35 points. So no reverse split coming, at least not today, listeners. And VolQ 31 and a quarter up almost 4 points, about 3.5 points. So NASDAQ vol looking frothy. If you want more NASDAQ vol, stay tuned. We'll be talking about that and a whole bunch more on TWIFO. We, of course, have the big ETH merge going on today. And we also have CME launching ETH options this week. So we'll have Tim McCourt, the guy who handles all their crypto as well as their equities and their vol, coming on the show a little bit later today to talk about all that. So stay tuned for that if you're listening on demand. Just hit next on your device of choice. Should be hanging out there waiting for you after you're done with the old OB, of course. Let's go around the horn. Let's go the way we came. Let's start with the Uncle list of Mike. Mr. Uncle Mike, sir. First off, walk us through your thoughts on the mad, insane sell-off that we witnessed earlier this week, as well as the rest of this, as the Rock Lobster puts it, Jekyll and Hyde market that we're all living through right now.
Well, I think what the sell-off boils down to is just the fear of inflation and whether or not it's going to continue to happen and the Fed raising rates more. Who knows? That's a much deeper topic than the strategy block or than the trading block. But what I'm seeing right now is that I think that it wasn't so much the sell-off from my take of what happened the other day with the sell-off. I don't think it was so much the fact that it looks like for sure the Fed's going to raise 75, because I know the talk was, is it going to be 75, 75? Is it going to be 75, 50, 25 or whatever? But ultimately, the ending point was looking to be around 3.8 to 4%, something along those lines. But it looks like the ending point for the interest rate hikes has now gone up to, I believe, 4.25 in the Fed futures, or that's what at least what the readings were on Tuesday. And so I think that is something that is fearful for the market to digest. Now, understand where we are with this sell-off. I'm just looking at a chart here on the low of the day on September 6th, which, might I remind you, was 9 days ago. Tuesday of last week was 38.86. And then we rallied off of that, of course. We had a 1, 2, 3, 4-day rally. And then we had the big sell-off on Tuesday. The low that we have had since the sell-off has been above 3,900 every time. So I think the question that needs to be asked isn't so much, is this sell-off for real? I think the question that needs to be asked was the rally last week for real? Because we had a pretty nice rally off of the lows in that on September 6th, if we're at 38.86, and then all of a sudden we go to a high of 41.19, that's a pretty big move for, I believe it was 4 trading days. And so over the course of 4 trading days, for us to go up that quickly, that's pretty big, even in a volatile market as such. And so when the market saw the news of the inflation numbers that came out a couple days ago, about an hour before the open, there was a big sell-off in place. Now, the other thing to take note of on here is that it was not on the 12th, but on the 11th, we actually closed above the 50-day moving average in the S&P, or I'm sorry, on the 9th, the Friday previously. And so on there, we held that moving average. We gained a little bit more on that Monday, but then on Tuesday, with that news, that's something that took the market right back down. Now, typically when we have 175-point down days in the S&P 500, or I believe it was 4.3% that the market lost, a lot of times there's more sell-off that's going to be coming into play. I don't have any scientific data to back that up, but I'm willing to bet if you look at whenever there's a 4% downturn in the S&P 500, it usually does not flatten out, but we've kind of flattened out over the course of these last 2 days. And so does that mean that now we're at the bottom? No, I'm not saying that at all. My official take on the market is that I think it's kind of a market for crazy people right now. And the way with which I'm playing it in the aggressive strategy is I'm just putting on very small positions to where if I'm going to get my face ripped in, I'm going to get my face ripped in with a small amount of money. That's kind of my philosophy. And if it's going to go up higher, then we'll benefit. But for right now, I have very minimal deltas in this market. And so on there, I think that we're at kind of an important level at this point in that 3,900, or I should say 38.86, is the recent low for the market. And we have not touched that low since July. And so are we going to go back to the lows that we had in early July, or I should say, not early July, rather early June? Are we going to go back and touch those lows? I'm not sure. But for the time being, with this 4% sell-off with which we had, it's really just giving back the gain that we had over 4 days. So that's kind of my take on it for the near term. And if that doesn't prove to you what type of a crazy market we're in right now, I don't know what will, quite honestly. Now, in terms of the treasuries, it's once again, there's not a giant rush to safety right now because no one wants to buy bonds because everyone's afraid that the interest rates are going to go up so much. And so bonds, whether they're still kind of stabilizing, at least with the 10-year note at the 3% or in the mid threes where it's at right now, we're not getting a rush to buy in that area. We still do have an inverted yield curve, which is never a good sign for the market. But we have short-term bottoming that's kind of existing. So all of that sounds kind of crazy to me. And anyone that would really want to put a lot of money into this market on a leveraged speculative format, I think is kind of crazy. So my take at this point right now is that this market's kind of built for crazy people. And I try not to be too crazy. So I'm being very cautious whenever we have movement as such. And that's my take on these markets.
Interesting to get the take of the permabull here in residence. But yeah, it's funny. I think I've said many times now, I'm more surprised by the rallies these days than I am by the sell-offs. I think we have a lot of lower to go before we go higher. I think a lot of our guests this week have come on expressing a lot of that same sentiment, which is interesting, including our pro Q&A. And even Mr. Oracle of New Hampshire there on the advisor's option yesterday. He's not been shy about trying to call bounces out there and when he thinks things could rally. And he's firmly in the bearish camp again, which is interesting. But for that said, all the folks out there who are going crazy, And Eve, I see it a lot of the last couple of sessions. Oh, 3,900. If we break through 3,900, look out below. And I have to say to myself, well, we were just there like a week ago. It's not like so much has fundamentally changed over the course of the last week. And now, all of a sudden, if we go back to where we were a week ago, it's look out below for the markets. Just crazy times we are in. I think you are correct, Mr. Uncle Mike. These are definitely markets for crazy people. Luckily, we're all kind of crazy on this show, so it suits us. Mr. Rock Lobster, sir, you lead the crazy charge out there. First off, what were your thoughts on the mad sell-off we saw earlier this week, and now these equally crazy, as you put them, Jekyll and Hyde markets, sir?
Well, I have to say, I like Mike's take on that. I think he was, I think that's a very astute observation with like the 3,900 level. And it just made me go back and I had to do a quick and dirty chart analysis because I'm not really a chart person per se. I just find it interesting where, like, what I try to do is I try to pin sentiment versus a market price and like by VIX. So if I figured if TOSAW's logic was correct, VIX right now, volatility probably should be lower if the whole rally was kind of a smokescreen. VIX should be lower than it was with S&P 500 at the same place. And sure enough, we are at a lower VIX place. So I would say that would be confirming of TOSAW's, of Mike's idea of 3,900 seems reasonable. So, why do I say that? Well, we're kind of, the low when everybody thought the world was going to end, let's say, was 3,700 when we had like energy issues, supply, gold was flying. There was definitely some panic in the air, right? So let's say 3,700. 3,900 is about as low as we got when the Fed decided to announce their aggressive rate level. And that was, I'm going to say, the decline started in April when we had kind of the Goldilocks rebound. As everybody recalls, we were almost back to all-time high, like 4,600. And then the Fed's like, wait a minute, it's not, we got inflation is for real. And boom, 3,900 is about where we kind of bottomed out, maybe one bad day to 3,800. And then from ever since then, it was all a function of the Ukraine. And then the Fed stepped on the gas a little more. We're gonna raise more. And then the only reason why we've had a rally is the Ukraine thing became somewhat contained, I'd say, for energy markets. And the Fed rate rising regime has been fairly consistent now. They ramped it up higher, and they're going to keep it that way until the foreseeable future. And then we had what I would call probably a snap relief rally, both in August and in mid-September, on the chance that inflation was dying away faster than everybody thought, right? Because 3,900, I would say, is kind of that inflation level. We took 25% off the equity market from there. And now that's where we find ourselves. So I think Mike was right. I think 3,900 does sound like a pretty good area for VIX at this point. I'm sorry, for the S&P 500. Anytime we rally from here, it's because we're going to get out of this inflation thing sooner rather than later. Again, just looking at all of the levels, and that 3,900 was important for that level. Again, sentiment versus where the SPX is. And I never really thought about it like that. So I'm like, hey, wow, that makes sense. Now, but also we're getting to this level now from a pretty steep crash in stock prices. So you think VIX would be higher, but it's not. As a matter of fact, VVIX is falling today. VIX is falling today. The S&P 500 isn't doing much today. The Dow's actually up because of a couple of stocks. Healthcare stocks, I think, are pretty strong right now. Government spending, most likely. So I'm like, hey, this doesn't look like a bad reason. Now, would I be looking at, now I'm looking at like iron condors, basically, because I don't think we're going anywhere. What would I hedge an iron condor with? Short-term options if we started to move a little bit, either up or down. But I'm like, I would strike it at like 4,300, 3,700 for that But yeah, I could say, 3,900 is kind of the stinky, we have inflation and we don't know what to do area, and we gyrate around that number for a while. So I like it. I think the fact volatile versus the last time we were at 3,900 is relatively confirming. When I look at it from, let's say, I would say the July coming out period, when we thought really things are going to get very, very bad, like there was going to be no energy, which again, all these things could still happen. Remember, all the issues that made 2022 what it is, none of them are solved absolutely at all. The only thing, strangely, that is kind of taken off totally, but you haven't heard anything about it, is COVID, which dominated headlines in 2020 and 2021. Nobody's even talking about it anymore. That's because, okay, apparently we got the boosters, everybody's had it, and nobody cares. Now, it doesn't mean people aren't dying and all the rest, but from what I would call I believe it is on now the third rail of politics for the party in charge, possibly, and any other government that wants to start lockdowns or masks or any of this other stuff, when all the data is out that none of it really did much good in the first place. So that is actually literally off the national, the media scale, from what I can tell, and it's definitely out of the market. Like, there isn't the Chinese the only people that keep beating that drum is China, and I do not think it is helping and it's definitely a damage to their economy. But, you have a dictatorship, you can do what you want. In the West, it didn't work as well. So, and here's where we are. We're at a place now, the Fed, I think it's 80, 90%, they're going to raise by 75 basis points. And I think the biggest problem really is cost of food. The cost of a lot of things are still about 8% higher than they were last year, and they keep going up. Energy is pretty much dependent on what's going on in the Russia, Ukraine, and all of the disconnection that's coming from that. That's a huge chunk. And domestic production is flat for the last 2 years, even with prices where it is. So domestic production, I think net has dropped. Again, none of this I think it's bullish for energy prices, but it's not good for economic growth when energy prices go sky high. So I think, in short, this 3,900, I like the thesis. I like Mike's thesis. I think it's pretty good. And yeah, I think we can certainly gyrate around 3,900 for a long time. And I think that's why VIX is not trading 30 or 35. If you want to see an interesting picture from the beginning of the year, okay, with VIX literally in the same spot, you can compare the February options. So you're looking like mid-January and looking at February expiration versus taking today's date and looking at October expiration currently, right? The price, the volatility in VIX itself is like magnitudes higher in the February cycle, magnitudes higher. The same straddle today, that is $2 for basically buying 1 month versus VIX time. Right now, that straddles $2. And in the February cycle, and we're looking Jan 21, this was after the Jan 6th, when all this stuff was potential, right? When it was all potential, that straddle was more like $4.50. And the volatility differential is, I think right now, the vol's around, 90, and the volatility in the Feb cycle was like 140. So totally different market perception, totally different. So again, I think the volatility story backs up Mike's 3,900 thesis. Because I've been curious as to why there's been no real pop, because there is no pop, right? There's no pop in volatility. Skew is at historically low levels with absolute volatility this high. So I think we're just in one of these things where it's going to suck, right? The Fed cannot save the equity markets. The only thing they can do is raise rates. The federal government's going to have to play their part in reducing expenditure to tamp down demand, and they're clearly not doing that. So, and then the whole European thing is a total wild card as far as inflation goes. So I think you have these issues, and the problem right now is the market can't see the end point anymore. I think when we keep rallying to that 4,300 or 4,100 or whatever the rally is, there's like an inflation endpoint that the market has picked, and they can pin to that endpoint. And I think right now, aside from whatever Fed governor says something to kind of rally the market, we don't have that endpoint anymore, and we will be volatile around a fixed area. But again, it's just zone 4. It's the highest quartile of all, but we're not really going anywhere. We're just gyrating. So that's why I call it the Jekyll and Hyde market. It's a relatively high volatility orbiting market. It's not going in a up or down direction anymore. Oh, there. That was a very long-winded way of agreeing with what Mike said.
There we go. I like it. All right, let's get on out to what's lighting up the rest of the tape today. And, not a heck of a lot of paper on the broad index front, especially, well, it depends. On the vol front, certainly not the case. VIX only 161,000 contracts today. So the VIX it's kind of shrugging its shoulders at this latest round of whipsaw action. The ADV hanging out still right just a little bit north of that 400K level, 406 right now. So has ticked up a whopping 5,000 contracts since our show on Monday. SPY doing a little bit more paper, 4.63 million. That's as expected. You expect a whipsaw day in the S to generate a little bit more paper. The ADV, 7.3 million out there. I'm sorry, that was SPY. The S, 1.56 million. The ADV, about 2.5 million out there. And then small caps, IWM, 423,000. So a pretty active day for them. They're closing in on half of their ADV. So that's decent, especially given the fact that that ADV is quite inflated over the last couple of weeks. It's up to 863,000 right now. And the Qs, 1.57 million on the tape right now. The ADV, 2.63 million. Let's get on out to the single names. This interesting list today. Got some names popping in there we haven't talked about in a while, including number 10, Netflix. By the way, listeners, we're looking pretty robust today. So on a day when VIX is lagging, the single names are doing some numbers. So there you go. That inverse correlation holding true yet again. Number 10 cost you 297,000. So almost 300,000 contracts to break into the top 10 today. We haven't seen that in quite some time. So that's an impressive number. That gets us to Netflix. Netflix on the rampage today, 241 and about a half, up over 17 handles, or about 7.75%. So Netflix feeling the love out there today. Man, they are rocking and rolling today. Haven't seen Netflix in our top 10 in quite some time, and not usually on an up day. It's been a lot of down days last time we talked about Netflix. Today, getting a nice lift. Number 9, right behind it, we have the Rock Lobster's favorite. It's Softy. They're not feeling the love today. Off nearly 2%, 247.60, off about almost $5, 460 right now. Good for 318,000 contracts, though, so a decent amount of paper for them. Then number 8, we're getting back to the usual suspects again, the artist formerly known as Facebook. It's Meta. Today, feeling a little bit, I put in parentheses or quotes really, an emphasis on a little bit, only up 15 cents. They're trading 151.60 right now. They got as high today, let's see, as almost 154.20 actually, and the low was 149.25. So they've had pretty much a $5 range on the day. So they are rocking and rolling. Hence the fair amount of paper, 358,000 contracts. Now we have another frequent offender here for number 7. This is AMD, but they're a little bit lower on the list than they usually are. 361,000 contracts for AMD. They're up about 35 cents right now, or about 0.45%. And they've had about, looks like, actually a $3 range for them today as well. So they've had a nice little range out there. Number 6, this is the name I've joked about before. We can do almost our entire options oddities show about every week if we really desired. It's ChargePoint, lighting it up today. 361,000 contracts. I hesitate to even look and see what's going up out there. Maybe we'll dive into a little bit on oddities. But then again, I've talked about it before. There's so many weird, crazy size prints going up that you look at it, you're like, what are these folks doing? And they do it day after day. You could literally spend all your life just analyzing ChargePoint paper. Instead, we'll look at it today, 19.75, up $1.60 or 8.75% today. Nice pop for a good old ChargePoint today. Wow, big move for them. And then number 5, back to the chips, it's NVIDIA. We started off really strong, listeners. We started off at almost 300,000, and here we are pretty much at number 5, so halfway through our top 10, and we're only at 369. It gets us to NVIDIA. So interesting. It's a solid day, but we're not really seeing that progression that we normally do. Usually by this point, we're higher on the list in terms of volume. NVIDIA off about a nickel today, 131.25. They've had, though, a decent range. They've had about, looks like almost a 4.5 point range on the day. So a decent range for them, generating some paper. Number 4, this is an interesting one, Mr. Rock Lobster. Haven't seen this one in the top 10 in quite some time either. This is good old SBUX, doing 432,000 contracts today. It's up $0.25 right now. We're trading right around $93. It's had, let's see, about $1.50 range, a little bit less than that on the day. So that's a decent little range. Actually, it's not even been a range. It's been a rally. But that still doesn't account for, I'm looking at the news here. I'm like, what is the union news? None of this seems adding mobile ordering. That's not really going to maybe account for this amount of paper. So I had to pull it up while we were talking, Mr. Rock Lobster. And it appears that someone is on the move out here in StarBucks today, listeners, because the first thing we noticed was 86,910 of the DEES 100, 110 verticals going up. Paper buying the 100, selling the 110s. So again, about 87,000 contracts each there. But then there's more. Then they also sold 121,000 of the March 110s against it for about 250 as well. Again, all of that was opening. And then also, we dig a little bit further at the same time, they also, looks like they dumped about 87,000 of the DEES 92 half calls. So that's where all of our paper is coming in, this one massive spread/roll. I say roll because it wasn't opening on the 92 halves. So I actually did have a chance to look really quickly, and they opened those 92 halves back in July. They were rolling those up from an earlier strike as well. So it seems like this person has been aggressively buying these. They keep rolling up, though, which is interesting. So they keep the party going, dumping these out today, and then buying the vertical. Then the weird one, Mr. Rock Lobster, selling an extra 1.5 times of the March 110s just for fun, just for a kicker, I guess. I don't know. So weird paper afoot in StarBucks today, listeners. Maybe we'll have a chance to check that out maybe a little bit later this week on oddities as well. That's a funky one. That's a funktastic one. I need more time than I have now to sink my teeth into that one. Number 3, Amazon, 520,000 contracts on the tape. Numero 2, we've got the old APPL, 1.25 million contracts on the tape. It's the first time we've seen Apple over 1 million in a while. Let's see how Apple's hanging out today. Off $1.50 or nearly a full percent, trading a little bit shy of 154, about 153.83 right now. They got as low on the day as 151 and about 3/4, so they have bounced off that. They've had a pretty decent range, 4.5 points on the day, so they've been moving for Apple as well out there. And then number 1, if it's not Apple, it's the old Tesla, 1.59 million contracts. So that's a big jump even from number 5, 369. Now we're at almost 1.6 million for number 1. Tesla back over $300, $4.50 to the upside today, 307.25 to be precise. So quite the move out there. Looks like they got an upgrade that seems to be driving. Also the Twitter purchase that Musk doesn't want getting approval. That good for, again, 1.6 million contracts on the day out there. In terms of earnings, we had Oracle and Adobe. That's pretty much the big poppers for this week. Next week, we do still have some. We have, looks like Costco and I think Dry Ships out there and a few others. Remember that name? They were a hot one in the squeeze season for a little bit out there. If you want to have a deep dive into all these numbers we crunch for you folks on the earnings front, check out the advisor's option. We just did it yesterday with Matt. It was fascinating stuff, and it should be on the network right now as we speak. So as soon as you're done listening to this, maybe while you're waiting for TWIFO, you can listen to the advisor's option. As we keep on rolling, it is time to unleash the Eye of Sauron. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get wild. Let's unleash the beast. How about, first off, Mr. Rock Lobster, what would you say if I offered you the chance to grab some calls in Grab Holdings Limited, huh? That excites you?
We are back to GRAB again.
Grab. We're going to grab some grab. Does that excite you?
It does excite me a little bit. Isn't this the Uber Eats of Indonesia or something like that?
Yeah, it's based out of Singapore.
Yep.
But it is in that neck of the world. Yes, Grab Holdings, they return. It looks like someone's grabbing some calls in Grabster. Not to let the cat out of the bag here. Grab Holdings right now, listeners, ticker symbol Grab, of course. Trading right now 302, off about 2 cents today. It's not a huge mover for them today, even though they had about a 17-cent range. But on the year, a different story. A year ago, they were trading 10 1/4, so they're off 70% on the year. And of course, from their high, they got up to 17.15 in November. So from their high, it's been just a very precipitous decline. Rough sledding there for Grab. Their low came 2 1/4. It seems like they flirted with that multiple times between April and now. So looks like it kind of came in that May to July timeframe. They flirted with it a bunch of times. So yeah, been a rough sled for them. They're up to $3 right now. And it seems like, Mr. Rock Lobster, someone's saying, you know what? Let's kick this party off right. It's time to grab some grab calls, because they were coming in today and scooping up 4,492 of the October 3-half calls, paying a whopping 15 cents. That's a 77 vol. Not quite triple-digit vol, but they're lifting the offer on a cheapy name. It's got some meme overtones to it, let us say. The stock was pretty much right here, about a nickel higher when they bought these. There are no earnings between now and October expiration. And you know what, Mr. Rock Lobster? They liked it so much, they said, we're going to buy some more, and then we're going to buy some more, and then we're going to buy some more. Total of 12,000 on the day. So folks are coming to play. So my question for you, Mr. Rock Lobster, is that do you too want to grab some OC 3-half calls in Grabster?
I just posted a graphic for you. The relative volume of the latest big chunk of paper versus how it has been trading in the past. I put it in the Skype channel. I mean, it's definitely moving up, and there's been, this is like all of these stocks that were once beautiful, and I guess they're unicorns they call them or something, where they were once very popular, and now they are not popular anymore. I mean, is it a reasonable call purchase? Sure, if the stock can sort of catch fire again and become something, I think they're probably reasonable calls. It is not something that I personally would go out and purchase, but I don't think they're unreasonable calls. But again, what do you need? Like you need a 10% move in the underlying. Let's see. Yeah. It could happen. It could happen. A stock like this could just go flying. It really has no short interest anymore, because at $3, who's going to short it? So I think it's a reasonable punt, but let's say, I guess, the October straddle is trading around 50 cents. So it has a shot, I would say. There you go. I'll just go with that. It has a shot.
Look at your little chart here. It says it's done 120,000 contracts. A couple of times it's flirted with that. Precipitating some big moves in the stock, except for that 120,000 day. That didn't really precipitate much of a move at all. The stock kind of hung out. Looks like that was it looks like the May to June timeframe, maybe. And yeah, it looks like stock kind of hung out there for the next few months. But yeah, intriguing stuff. We'll see if this paper goes up. What do you guys think in the chat? You guys like these OC 3-halves? You want to grab some of these grabs while the getting is good? Do you think Grab can make a move? Are you big on Singaporean Uber competitors? Let us know your thoughts there as we keep. Or you folks on demand after the fact, you can hit us up too. We don't eschew your comments or questions. Let's flip the script now, because it is, at least it was, I should say. It was looking like it was going to be a down day. So we got some puts lighting up our Eye of Sauron today as well. Go figure, including, this is a newcomer. This is Vaxcyte. Looks and sounds like a biotech. I don't know exactly what type of biotech this is. Ticker symbol PCVX. They're out of California, and they're trading right now $28.40, off about 6 cents. On the year, they're pretty much actually up a little bit, up about 7 1/3%. So, but they, like any good biotech, has had a rockin' and rollin' time. A year ago it was 26.40, so they're pretty much up exactly $2 from there. And then they've rallied to as high as 29.75 and as low as 16.72. That 16 handle came, looks like, in about January, and then they revisited it again in June. That high for the year came, looks like, very recently, just a few sessions ago. So they're flirting with their highs for the year here. And they were in June, on June 14th, they were at 17.68. So they've had a nice pop since mid-June here. This name has done this a couple of times over the course of the past year, as you would expect from biotech. Rally, then give it up, and then rally, then give it up. Looks like today our Eye of Sauron is thinking this latest bit of sell-off maybe has more to go. Let's see. This is the D's 20 put. Again, this is these markets are just an atrocity. No bid at $5. I could do a lot with no bid at $5. I'll go a dime bid at $4.90. What you going to do? All right, so yes, so the no bid at $5. He puts one up for $3.50. Let's see, where was the stock? 28.21, and these were the 20 puts. So these are pretty far out of the money. 148 vol. So these had the whiff of they were buying these, but again, this market is such a just atrocity that it is hard to read too much into those tea leaves. The vol, though, is substantial. One would hope they would be selling a 150 vol, not buying it, but we have seen crazier things. They have also broken through the 20 handle a couple of times this year, so this person could have some legitimate concerns, enough to pay $3.50. So you're stopping yourself out at 16.5 when the 52-week low is 16.75. I'm not on board for those. Mr. Rock Lobster, I know which way you would rather put this trade on for yourself, but what do you think the customer is up to, and what are your thoughts?
Again, as you know what? I think there isn't a $5 wide market that you cannot like. $0 to $5.
Imagine Ogre from Goldman back in the day would walk into your pit and he asked for a market and you gave him no bid and $5 on anything. Imagine that. Imagine the response you would receive.
Yes, he would not be very happy. Although they have stepped up to the plate and changed the market to bid at $3.90.
Oh, how generous! How generous of them. These market-making kids today, they don't know how good they have it.
Yeah, I think it's I think it definitely favors certain firms the way it's currently, no competition is probably, or small competition, it probably works well if you're the market maker. And this is just some kind of weird clinical stage vaccine. Oh, protect humankind, blah, blah. Let's see. Yep, no revenue. So it's a pre-revenue company, and I'm going to guess they bought these puts. Is that what your Eye of Sauron was telling you? It kind of feels put buy.
Yeah, I thought they bought them, which is just horrible. I don't like it at any level. I guess I'd rather sell them if I had to do it, because that's just a ridiculous ridiculous price level. Stopping yourself out below the 52-week. I don't like any of that. So yeah, but I love the market. I wish I could make markets like that.
Yeah, it's like, I have to say, I don't love either side, just because this stock is like, who the heck knows? I probably would make a fair delta neutral type trade. I mean, it's sitting here, was a $55 stock, so maybe they have something promising, but right now it's just on the back burner, I would guess. But I just, at 3, I would probably rather be a seller of those. I think it would be probably a decent delta neutral sale, something like that. But it's, I guess they want to protect the 20 level, but it's just, I did nothing I really like about that.
Yeah, not much to love there, really, except for if you're selling it, then yeah, I can get behind that. But yeah, this is just, which way would you rather go, listeners, on this no bid at $5 trade here? Good times. Let's wrap it up here with a line in the sand. There we go. Yes, this is Synchrony Financial. We talked about them before, but on the pro side, on Options Oddities, listeners, ticker symbol SYF. And let's see, trading right now right about $33, up $1.25, and nearly 4% today. So a nice pop for them today. On the year, they're off. They were 48.25 a year ago. They've mostly trended lower, off about 31, almost 32%, about 15.25 handles on the year. They hit their low for the year back in July. 27.25 was their low. So they've rallied over about $5.50 from their low since mid-July. It's a nice little run over the last couple of months out here. And it looks like Mr. Rock Lobster, someone's coming in and drawing a bit of a line in the sand in Synchrony Financial, selling 8,000 of the Nove 29 puts for $1.08. Weird prices. It's a 48 vol if you are intrigued, listeners. This was, stock was 32.75, so it was a little over 20 odd cents lower when they put these up. There are earnings in this cycle. The earnings are on October, actually, so the Nove puts will run through earnings, which is interesting. So drawing a line in the sand through earnings. And this kind of raised the hackles on the back of my neck. Mr. Rock Lobster said, this sounds familiar, this trade. So we went and looked, and we did talk about Synchrony back on Options Oddities on the 19th, Mr. Rock Lobster, about exactly a month ago. And it seemed like it was kind of almost the polar opposite trade. It was an 8,000 lot again. So that's interesting, the exact same size of the OC 32 puts, and paper was buying those for $1.39. So someone bought 8,000 of the OC 32 puts a month ago. Today, someone is selling 8,000 of the Nove 29 puts for $1.08. We did check, and those OC puts are still open unless they've closed them since we launched the show. So it seems like, Mr. Rock Lobster, perhaps someone legging into a bit of a diagonal put spread here. What say you, sir? And everyone's favorite, Synchrony Financial.
This feels like one of those companies where they just changed the name. It was something for like 100 years, and they just change it because they think they're trying to update upgrade the the name somehow. When the SBO, the CBOE changed it, hey, we're going to be the SBO now, even though that's what everybody called it. They spent all that money to do the marketing. So wouldn't change over. So it's a bank. It's having a good bank day because with rates are, I think that rate spread is, sorry, but it's going to be good for the banks. You're looking for something that's investable because credit is so much tighter now for houses and stuff like that. I think all the credit risk is with sovereign debt at this point. We've essentially moved it all to there, in my view. So let's see here. Yeah, this is, again, right in the middle of the road. I'm just looking at, from a flow point of view, I think this is a yield harvester selling puts, pension fund, whatever, instead of, because it pays a fairly good divvy, I believe. It's about $1 a year. So they're like, hey, I don't think the stock's going up a bunch, but we'll take the $1 dividend we expect to make this year. We'll just take it all right now. I think that's kind of, I think that's what they're doing on this one.
And what we are doing is continuing rolling into our next segment. It is time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. You guys get to take the reins, your questions, your comments. We also shine the lights back on you folks out there, just like we're doing right now. Our question of the week right now is kind of a retread from one we did close to a year ago now, maybe 8 months. And it was a surprising result then, so we wanted to revisit it now. We're asking you this week, we've seen an explosion of new options traders in recent years. So that brings us back to the age-old question, when did you start trading options? And before you ask, we didn't have a chance, to add the super old school option. You'll see what I mean in a second, because we gave you 4 choices. You just started this year, so you're a complete options baby. Just started this year, cutting your teeth on these options things. Or you kind of joined during the pandemic rush of 2020 and 2021, which has continued into this year, obviously, but we wanted to break those out into 2 separate choices. Then you're in the old post-Great Financial Crisis of 2009 to 2019. You joined somewhere in that decade, that illustrious decade. Or you're what we call old school for this poll, which is pre-2009. Now, to me, if you started in 2009, you're still relatively new in the world of options. But hey, you only get 4 choices in Twitter. And we really wanted to focus on the nearer end of that curve because that's where we saw some interesting numbers last time. So let's go around the horn. Let's start with the Uncle list of Mike. Mr. Uncle Mike TOSAW, sir. What is your vote? And then more importantly, what do you think our audience is choosing for when they started trading? Is it this year? Is it during the pandemic rush? Is it during that decade of the post-financial crisis? Or are they pre-2009 old schoolers, sir?
I'll say pre-2009 old schoolers. And with me, it would be the same thing in that I started out when I realized I was just getting cut from various professional football teams, substitute teaching, yelling at kids. I had nothing but silence in the classroom. So what the heck? Let's trade some options. And that's when I started.
Very conducive time to trading options when you're in front of the class. Quiet kid, I'm buying puts. Let's go to the rockingest of lobsters. Mr. Rock Lobster, sir, what is your vote? What do you think our audience is voting for here as far as when they started slinging them their options?
Oh yeah. I would say the pandemic rush for sure. And me, the old school is laughably.
Yeah, I knew you would take umbrage at that.
That's 2009 doesn't even count.
No, I agree. But hey, we got to play with within the Twitter rules, sir.
It's all right. I'll let it go. I'm gonna let it go. But I think the pandemic rush will be the popular.
Let us see, listeners, what you folks have on the brain. And right now, it is the post-Great Financial Crisis, that decade of madness, 2009 to 2019, leading the dance with 45%. And then right behind that, we have old school at 30%. So good to see our old school audience, folks, still hanging out there. So between the two of you, 75% of you started trading pre-2019. Now, the flip side of that, you could say 25% of the audience has started post-2019. But that's kind of in line with what we saw last time. We saw nearly 30% of the audience said they had started trading pretty much since the pandemic. And that's pretty much what we're seeing right now. 22.5% for the pandemic rush period. Only 2.5% of you saying you started this year. Maybe you're embarrassed to say. You shouldn't be embarrassed. You started trading this year. That a lot of people did. You are not alone. So I thought that number would be higher, which is why we kind of delineated that out. Maybe next time if we did it, we would just do post-pandemic and then maybe some other range. And then to satisfy the Rock Lobster, I know many of our others in our audience who are experienced and took umbrage at this. We put it even in the question. We said we don't have room for a super old school. But if we did this, maybe we would do it that way. I thought more people would be choosing the just started this year. Then again, we got about a day left, so we shall see how things shape up out there. Listeners, as we keep on rolling, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, let us go around the block. Let us start with the Uncle list of Mikes. Mr. Uncle Mike, sir, what are you keeping an eye on until we can gather here together on the program on Monday?
I'm looking at the 3,900 level. I want to see where we go from that, if we can hold that level. And just also watching the VIX. One of the things that I remember just talking with someone after the sell-off the other day, why is the VIX not up more significantly on that sell-off? And then that makes me think that maybe that rally that we had before that wasn't the real thing to begin with. So we'll see on that. Watching that, continuing to watch the 10-year. We're at some pretty high levels right now on the yield, or low levels on the price of it. And so seeing if it can hold those levels.
Mr. Rock Lobster, same question for you. I also see your beloved Palantir is trending today on Twitter. I guess that's a good thing. I was working some, you can get some put spreads for credits out there yesterday. I was at 1x2s. I was looking at some of those yesterday. But what's catching your eye out there, sir? Maybe we'll talk about Palantir tomorrow on Oddity, sir.
Palantir's actually up.
Yeah, it's rallying 5%.
Yeah, I told you I got put at the $9 level, which I felt pretty brilliant after it just traded 10.5. But I've learned my lesson. I will only get put now at $7 for the future. What am I watching? I think, to be honest, we're going to be and I could be totally wrong here, but I think we're just going to be watching paint dry until the 21st, and the Fed is going to say something on rates, and then the market will essentially be rudderless, bouncing off whatever news story we have. And as people try to figure out what level the S&P 500 has to get into to have a inflation problem, and I guess the biggest thing that really will hurt equities at this point, I think, is just that there's no handle on inflation whatsoever, and we have double-digit inflation next year. And then I think we could have, like, then you see a new level. But up till now, like, earnings, the earnings have not been great this year. I think probably because of all of the issues of 2022. So what I'm really interested in seeing is where volatility goes from here. If we can pick up a bid, which I feel like it's trading very heavy at this point, and if the market really decides, like, you know what, for the next 2 years, equities are dead, and we could see like a lower number below 3,900. If we're not out of the inflation woods, we're going to see, and it's amazing how fast, like, the consensus is, like, usually it's like a day or two, and all of a sudden, whoop, 3,700 again, because, equities are dead. So I could see that happening, to be quite honest, especially after the Fed's next report, because I can't see, after the CPI numbers and all the numbers that we've had, they can't possibly say with a straight face at this point that they're controlling the inflation problem at all. So I think it's going to be a rough sled.
Rough sledding indeed. Unfortunately, listeners, that music means the sledding is over, at least for this program. But don't worry. If you want to dive deep into all things equities and indeed crypto and everything else going on in the world of futures options, stay tuned. We'll be doing that in a little bit on TWIFO with our guest, Mr. Tim McCord. Haven't had him on in a while. Always like to bring him on when they have cool new products rolling out over there at CME, and they have a well-timed one coming out this week. But before we do that, let's go back around the horn. Mr. Uncle Mike, sir, if folks want to reach out to you or follow you on your various outlets, where should they go? What should they do?
Follow me on Twitter at Mike TOSAW. Love to have you give me a follow. I try to put out a lot of content. I'll be putting out, just had a family thing earlier this week, but I'll be getting back to my videos starting next week and putting out as much content as I can at Mike TOSAW, TOSAW.
Give the man a follow. He loves a good follow on the old Twitters. And Mr. Rock Lobster, I see you've been a little bit more active on the Twitter of late. If folks want to give you a follow, where should they go? What should they do?
Yeah, I mean, you could do Option Vol, I believe. I think that is my Twitter handle. I don't even know what it is, but I think it's at Option Vol.
I think you can say you're bringing some of your patented volatility snark to the Twitter world.
I am. I just mostly what I do is observation. So I'm not going to tell anybody what to do. I'm like, hey, this vol looks cheap. Hey, this vol looks expensive. Figure it out for yourself. So that's kind of what it is.
If you like that patented Rock Lobster snark, and then he brings it on Twitter these days.
Yes. So you can see it there. And also OxyBit.com, 888-TRADE-01. Ask for Ted or Oda Andrew. And if you heard this show, 10% off. There you go.
There you go, optionpit.com. That'll do it for us right now on the old OB side. Back again in about 28 minutes now for you cool cats in the secret club for TWIFO. All you on-demand folks, it'll be coming down the road a little bit on the old on-demand side. Back again, of course, tomorrow, noon Central, for episode 501. How do we live up to the big 500th episode spectacular? You got to tune in tomorrow to find out. And the volatility views after that for all you cool cats on Options Oddities for all you pro folks. And then, of course, back again on Monday, another episode of the Option Block. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.